Good morning, everyone. We have about a minute left before we get started. The presentation is about to start. Just want to give you a run through of some logistical matters to go over. For those of you that have been with us in the last couple of weeks, thank you again for coming back. We'll go ahead and get started right now. So for those of you that have not been with us before, my name is David Calderon. I'm with the Orange County Small Business Development Center, and I am the interim director here. And I am happy to have the opportunity to introduce to you Osvaldo Velasquez of Opportunity Fund. And he's going to be going over packaging your loans today. So I want to encourage all of you to please ask as many questions as you can. As we have in the past, we will be holding the questions till the end. So there is a chat feature. If you go to the very bottom of your screen, there should be a button there that says chat. Please click that and then type in the question that you have for us, and I'll go ahead and collect it and then prepare them for Osvaldo to answer at the very end of the last 15 minutes or so of the hour that we are going to be here today. Let's go ahead and start with the presentation today. As you can see, we're going to be talking about packaging for your loan. And before we get started, just wanted to share some information about the Orange County Small Business Development Center. Thank you for your patience, those of you that have heard before. And the main thing is that we are here to really support small business owners in Orange County with the resources that they need in order to be successful, either in the process of starting their business or in the process of expanding that business. And we provide a variety of services ranging from webinars like this one, or workshops, live workshops that we hold around the county, as well as one-on-one, no-cost consulting that is offered to all business owners. You get assigned a wonderful consultant, has decades of experience in owning a business, running a business, and has gone through a lot of the challenges that all of you have, that all of you may be facing now, and can really be a guiding force for you and your business. So some of the areas that we have expertise in is in access to capital, international trade, and we also do a lot of startup assistance. So the startup assistance is really geared towards individuals that are ready to go, and they just need some guidance in getting their businesses set up. So I do want to encourage you before the end of this session to please reach out to, or by the end of the session to please reach out to us so that we can set you up with an appointment to meet with one of our consultants. And as you can see down here, we do provide services in English, Spanish, and Vietnamese. Also, if you want to get keep apprised of some of the resources that we are offering at events that we're offering out to the public, please join our mailing list. All you have to do is text OCSBDC to the number 22828, and then you'll receive a text asking you to reply with your email address, and that'll get you onto our text messaging system. Obviously, please keep in mind that message and data rates may apply if you don't have an unlimited text messaging plan. And we are also on Facebook. We want to encourage you to please join our Facebook page. We often have a lot of really great resources there on articles that really help business owners kind of get, as they're going through the process of starting up their business. We also have events, partner events, and just it's a great way to communicate with us as well. So we do want to encourage you to please reach out to us via Facebook. Now, there is one piece that I do need to talk about. It has to do with a new state law, and it has to do with electronic file and pay requirement. So if you have a business and you have a business that has 10 or more employees, you are now required to electronically submit employment tax returns, wage reports, and payroll tax deposits to the Employment Development Department. This was put in effect on January 1st, 2017, and will actually be a requirement of all businesses in 2018. That includes businesses that are under 10 employees. Right now, it's only in effect for companies that have 10 or more employees. In 2018, it'll be for companies that have 10, even 10 or fewer employees. So please make sure to get informed about that if you do have employees in your business. So now, without further ado, I do want to introduce all of you to Osvaldo Velasquez. He is going to be our presenter today. He is a loan consultant serving Orange County for Opportunity Fund. That is a nonprofit micro-lending organization with over 20 years of experience financing small businesses in California. Osvaldo's experience includes business development for traditional banks, instructor for the Principles of Marketing workshops with La Opinion's Éxito Empresarial, a Spanish entrepreneurial training program, directing video production services and business consultant at the Small Business Development Center in Los Angeles. He has received his business administration degree from the California State University, Los Angeles as well. So I do want to now go ahead and turn it over to Osvaldo and thank him for taking the time today to share his expertise. And please, once again, I encourage you to all ask questions in the chat box, and I'll collect those and we'll go over them at the end of the presentation during the question and answer section. So Osvaldo, go ahead and take it away.
Thank you very much, David, and thank you folks for joining us today in this Packaging Your Loan webinar. It's a pleasure for me to be here and serve as many folks as are connected today in this endeavor in trying to prepare for obtaining the financing that you may need to expand your business. So let's get started. I want to just go a little bit further in saying that when packaging for your loan, I want to emphasize the importance of trying to obtain a responsible business loan that can be defined as follows. A responsible business loan being an accessible one with the lowest possible interest rate, one that doesn't have any prepayment penalties or costs, and that is favorable in time, so that you can have enough time to invest that money that you're obtaining and invest it in your business to then be able to generate the sales growth and the profits that'll make your business a successful one. So it's very important nowadays to keep in mind that there's many loan options out there, especially after the financial crisis of 2007 that was triggered by the housing crisis. There's a lot of folks that have their personal credit damaged, and that then limits their access to capital for their businesses or personal reasons also. So it has been a very tricky environment that has been created after the financial crisis, and a lot of banks, traditional banks, have been reducing their credits to a lot of folks, and in this case to a lot of businesses. So today my objectives are going to be the following. I'm going to try to review 6 steps to prepare for a responsible business loan. Okay, and so have your pens and paper ready to take down notes. Write as many questions as you like as we go through the presentation. I'm pretty sure that a lot of questions will be answered as we go through the presentation. So make sure you write those questions down, and definitely get in contact with the SBDC, set up an appointment, and review those questions with them. Any questions that you might not have answered at this point, but take advantage of the services. Those services are for you. They are available, and they're very valuable. You have many years of experience there at the organization, so they've been helping many people, so they have the experience of many scenarios. And I'm pretty sure yours is probably not as different as the ones that they've helped. So along the same lines of this environment that I was mentioning to you, another point that I want to make sure that we cover today is knowing the alternative lending landscape. So what that looks like, what kind of lenders are out there, and also what kind of interest rates they're charging that could hurt a lot of the potential of many businesses to grow. Okay, so we're going to review a little bit about the alternative lending landscape and versus the traditional lending landscape. So you have the traditional banks, the big banks that have the money to lend, but the guidelines and the credit policies are getting a little bit stricter. So that gives way to a lot of alternative lenders. So we're going to review a little bit about what that is. And lastly, I'm going to introduce a little bit about Opportunity Fund, which may be an option for you guys to access some credit and at the same time build your personal credit profile that will be important in your attempt to access traditional lending, which is lower cost loans. So those are the three objectives that I'm hoping to achieve at this time and as we go through the presentation. So before we start with the 6 steps, I do want to mention some important realities, okay? One of them being that there is no such thing as 100% business financing, okay? If you do know of some source that is able to finance businesses 100%, let me know. I'd like to know that just to either let other businesses seeking financing let them know about that. But as far as I know, there is no such thing as business financing, 100% business financing. Many banks will want to see that the business invest some money out of their own pocket. They want to see that the business owners invest money out of their own pocket because it's that's just the reality. So they are in the business of making money, the banks and business financing companies, but rarely do they risk 100% of the money that the business is looking for. So another reality is that personal credit history is important. Okay, it's a very long process for many folks that have bad credit to rebuild. But it is a process, and the more prepared you are as you're getting ready to obtain financing, the better you will be, and chances are that you will be able to gradually access the capital that you're looking for your business. Okay, so 2 things about that, and I'll share a little bit more about the importance of credit before the 6 steps. But it's very important that you're aware of that. So another reality is that the business owners are considered the personal guarantee in many cases for business financing. So banks want to see that not only your business will be able to pay back, but you'll have also a secondary source of income. And a lot of times that secondary source of repayment becomes your personal resources. So they want assurances. They want to know that one way or the other, that the loan will be repaid back. Remember, they're in business of making money, so they're just doing their part in minimizing their risk as in any way possible. So that's the name of the game. So we as business owners, we need to just understand how they see the loan applications and communicate to them by answering those concerns. Okay. The last point that I want to mention as far as a reality is the SBA, the U.S. Small Business Administration. It's a federal agency. It's not a financing company. They do not lend money directly. What they do is they do provide guarantees via SBA lender banks. So especially a lot of the traditional banks, the big banks, they are SBA lenders. So they go through a process to be certified as an SBA lender, and the banks are the ones doing the loans. What they do is basically they try to assess the capacity of the business to repay a loan back, and if the bank uh, cannot qualify the business owner for a traditional bank, um, and they need a little bit more reassurance to be able to take that risk and lend to the bank or lend to the business, then they do have that option to try to provide an SBA guaranteed loan. So the SBA is not the lender directly, but the SBA does do an important job in providing that guarantee to banks to then feel a little bit more comfortable in lending the money out. Okay, so I just wanted to make sure and we covered those realities. Okay, so talking about credit, uh, one of the important things about preparing for the credit aspect of your package for a loan is checking your personal credit report and your credit score. Okay, as much as possible. So, not sure if let me see. Okay, so David, do you see those highlights on the screen?
Yes, I do.
Okay, not
Do you
sure
want me
what.
to remove that?
Yeah, not sure how that's happening, but
Yeah,
anyway.
let me remove it.
Okay. So, like I was saying, the important thing about knowing your personal credit history and your personal credit score is understanding how that is created, because the way that we manage our money will affect our finances, and thus it affects our history in managing credit. So here we have a graph that basically breaks down what is it that generates a credit report, or a credit score, I should say. Okay, so we can see 35% comes from payment history. So the credit score is made up of 35% of it is made up of payment history, how we pay on time, and if we pay on time. So when we pay on time, and if we pay on time, that impacts the credit score 35% of the time. Another 30% is the amounts that we owe. So, for instance, if I get a line of credit with a limit of $1,000, then and if I have a balance on that $1,000 of $950, if I owe 950 of the thousand, then that will have an impact on my credit score. And the closer I get to the limit, the more it may lower, or it may tend to lower my score down, because it basically is telling a potential creditor that I'm struggling managing my money, that I continue to need credit to operate either my business or my personal finances. Okay, another 15% is the length of credit history. So if I've had an account, whether I have a limit of $500 or $20,000, if I've had that account for more than 10 years, that's going to have a positive impact into my credit score, and it'll have a 15% impact in that credit score. If I have instead maybe just 3 months with that 500 credit card, then it's not a lot of time. So I won't get that the benefit of that full 15% that goes into the credit score. And so on. 10% is the types of credit in use, meaning if I have a secured credit card, if I have a revolving credit card, if I have an installment loan, a car payment would be an installment loan. or a home mortgage would be another installment loan. The different types would contribute to that 10%. So, so anyway, so that gives us an understanding of what we need to keep in mind as far as what makes up the credit score. So if we know this, now we have an idea as to how we can develop a strategy in improving our personal credit score that will impact our access to a business loan. Okay, so moving on along, we have also the importance of, again, understanding the credit score and how that will impact our access to capital. Some examples would be that a credit, banks have a minimum FICO scores for certain things as a home loan. If you're a homeowner, you probably already know this, but if you're considering or becoming in the process of becoming a homeowner, you will come across this. Credit score will be important. There is minimum score requirements to be able to access a home mortgage, and especially in this case that we're talking about businesses, banks usually are looking for minimum FICO scores in the area of 680 or above. You could also take. Yes.
Osvaldo, I do apologize, everyone, for the short interruption. Osvaldo, in order to remove those, you have to just go up to the top, and where it says View Options, and then click on Annotate, and then a little menu will pop up, and just press Clear. I do apologize, everyone, for the interruption.
Okay, so where's that now?
At the very top, if you go to the top of your screen.
Okay.
And it says View Options there. You have to go up all the way to the top.
Is it Annotate?
In the area where it says you are viewing Osvaldo's screen. Yeah, and then go ahead and press Clear. There should be like a little button that says there.
Clear all drawings. There we go.
There you go.
Okay.
All right. Sorry about that, everyone. You should be good now, Osvaldo.
All right, cool. Thank you. Okay. Okay, I guess I'm trying to access now the clicker. So
there should be a little button in that menu.
Okay, here we go.
A little quick button, yeah. Just click down once.
Sorry about that, folks. There we go. All right. Okay. So in that process of trying to rebuild personal credit to then also have a better access to a business loan, Opportunity Fund is an option. Opportunity Fund, I'm going to tell you a little bit more about who we are and how we work, but just keep in mind that Opportunity Fund is an option for folks that may not qualify for traditional lending at a bank, but definitely want to avoid the high-cost alternative lenders. And again, I'll mention a little bit more about who those alternative lenders are and what's going on in that area. Okay, so moving along, some tips for personal credit building. Consider automated payments to always make your payments on time. It's easy to set up automatic payments nowadays with either your smartphone or online, where you can just set up your an account or any credit card payment that is connected to your personal or business account, so that that payment can be withdrawn automatically at a certain intervals, and set up before the due date. So that's an option that we have nowadays with the technology. Another tip would be to keep account balances at or under 30%. Okay, so the lower the balances that you have on your credit accounts, the more positive impact you will see over time on your personal credit profile and personal credit score. Okay, so also, again, like I mentioned, consider Opportunity Fund's Express Loan Program as an option to not only have access to some business financing, but also use that payment history on that loan from 2,600 up to 10,000 to help you rebuild your credit profile so that you can have access to return to the lower cost business lending option. Okay. Real quick, Opportunity Funds Express Loan Program ranges from 2,600 to 10,000. It's an easy program, and the only requirements are really that you be in business for at least 1 year. Okay, there's minimum documentation requirement. It's only a 2-page application. You don't need a credit history. We can work with that, and we're not a FICO score user. We do look at your credit history, but we don't have a minimum FICO score requirement. Okay, so that represents a very important aspect of having access to a personal a business loan with no FICO requirement. So step number 1 to answer key questions that bankers or lenders, traditional lenders, may have. This is the first step in preparing for in packaging your loan. Okay, so you want to be ready to answer some of these key questions. Okay, how much of the loan do you need? Okay, you're going to develop a business plan, and again, consider going to the SBDC, set up an appointment so that you can begin putting that package together. But these are some of the key questions that package should answer. How much loan do you need? What is the total project? How much money do you have to invest out of your pocket? And how much do you need? Okay, that's one question. Another question is, how will you use the loan? The money that you identify that you need, how much of that will be used for what purposes? Okay, and third, how will the loan be repaid? So you have to show data. You have to show financial projections. If it's a business that has been in operation for less than 3 years, and most importantly, if you've been operating, you need to show your finances, or the way that you're going to repay the loan back based on your actuals, and how you're going to grow from your actuals. Okay, like I said earlier, there is rarely 100% financing. So the reality is that one way or the other, you have to get the business going, even if it's at a small scale. And some businesses, from what I've heard, many businesses either save up for an initial capital injection or capital startup. Some businesses had support from family members. Some businesses had capital invested by investors, small investors, partners. So, but once that business starts to grow, and they still have that need for access to capital to grow even further, then that's where the banks come in, or that's where they become a good option. So the ideal thing is that the business, eventually can finance its own growth. But when the business is growing in stages, then traditional bank is an option. And these are the questions that you want to answer to be able to obtain that critical capital to continue growing. Okay, so some of the typical answers, or the categories, I should say, that that banks understand is it could be used for working capital. Okay, maybe you need a working capital to simply build credit for greater future access. Maybe you need working capital for the purchase of inventory of products to then be able to grow your sales growth in increments. And but this is what you want to try to answer in that package to the lender is how much money do you need for working capital? And if you can be as clear and as specific as possible, they like to see that. They like to see where exactly the money's going to go. They like to see that you're going to invest it in ways that will grow your business to then generate enough sales growth and profits to be able to pay the loan back. Okay. Another use could be to refinance an existing high-cost loan. In the case of Opportunity Fund, we see many of those high-cost loans that are defined as loans with an interest rate of greater than 30%. Okay, there is a lot of loans out there that are charging in, and a lot of the options that businesses consider. Because they have some back history or because they've been in business for less than 3 years, is personal loans. They consider some personal loans. They consider some title loans. So those are part of the alternative lenders. But for the growth of a business, those are risky and dangerous loans. And we've seen it. I'm going to share with you a little bit about a study that we did. To give you an idea of what we're seeing from businesses that we've helped that may be considered an alternative high-cost loan. Okay, but in answering some key questions, these are some of the answers that bankers want to see. How are you going to use the money? Either for purchase of inventory, how much inventory at the point that you're requesting do you need? And or if you're going to purchase a heavy machinery or perhaps a commercial vehicle to begin growing your market. Okay, so this is one important step right here. Step number 2 is prepare personal financial information. Okay, the business owner represents again a personal guarantee as a second source of repayment for the loan. So important information that will prepare to answer any question that the lender might have is, how much did you report in your personal tax returns? Okay, the personal tax returns identifies business income and other sources that you may have for them to consider in the repayment process. Personal financial statements, they identify the value of the personal guarantee. So they want to see how much debt do you currently have, how much assets do you currently have, and what's the net worth that they will have available in the worst case scenario that the business goes down. They want to see if you have any net worth that you're willing to use in a worst case scenario. So, but it is part of the information that they're looking for. They want to see what your personal financial position is at, if anything happens to put the loan at risk. Okay, personal bank statements. Obviously, it's an important document to be able to document how much gross sales you're registering, and you can show and prove to the lender that the business is generating. Okay, in the case of Opportunity Fund, that's an important one to be able to see what the current sales growth the business is going through. Okay, and these financial statements are information that, again, the SBDC can, with their expertise, they can help you prepare and organize as part of your package for a possible loan. Okay. Step number 3, prepare business financial information. Okay. So some of these key financial statements are as follows. We have a Schedule C if the business has been organized as a sole proprietor. and it's not a corporation. The Schedule C is a document that will be reported in the tax returns within the personal tax returns. Okay, that's a business document. Okay, proof of license, seller's permit, articles of incorporation, business tax returns. Banks usually want to see 1 to 3 years. Okay, and it's usually, from my understanding, is they need to see at least more than 2 to 3 years of the business in operation, because they want to see if the business is going to be a viable business. If it's going to be a business that is going to close in the 4th year or the 5th year, then that represents risk for them. So that represents risk for the loan that they're making. Okay, financial statements. 3 key financial statements are the cash flow statement, the income statement, and the balance sheet. Okay, the cash flow statement basically is a way to see how much money comes in and how much money goes out at any point in time. If it's within a month or a year, you should be able to prepare and have a clear picture of how much money comes in and out at any point in that period. So that is a part of the financial projections that could be very helpful in telling the banker before they lend to you whether or not you will be short in money. Okay, income statement basically tells a lender how you're performing at the end of a period. So income statements could be prepared for monthly or yearly, and it basically summarizes how you've done and how the business has been performing over that period of time. And balance sheet tells a potential lender, how much debt do you have and how much assets do you have at any given point in time. Okay, so these are some of the important key financial informations that the lender wants to see. Okay, step number 4, review key lending terms and requirements. Get familiar with the way that bankers look at any loan. They may not know about all the different types of businesses that they come across. They probably don't know how to do a juice for a juice bar. They probably don't know how to prepare pizza for a pizza place, or prepare food for any restaurant that they're considering lending, but they do know about numbers, and they have access to industry numbers that will give them a very good idea to compare to the numbers of the business that is requesting the loan. So they have a good understanding about that. Okay, so again, the way they look at the information is they look at credit scores to get a good idea as to the repayment history of the potential borrower. Okay, if you get a chance and you have a relationship with a bank, when you get a chance, simply ask them, to get an idea as to what are the minimum FICO score requirements, and you'll know that they have certain specific FICO score minimums. Okay, be aware of the current annual interest rates and how they're calculated. When you're considering a business loan, make sure that you compare what you're currently paying on existing loans, and then what also the rates are for those proposed new loan options that you may be applying for before you actually sign. Okay, so that you are clearly aware of how that's going to impact your financial information and also your business finances. So make sure to compare the payments. How much will a couple of interest points will increase your monthly payments and frequency. Okay. If you get a chance, we do have at Opportunity Fund loan.org /alternative lending terms dictionary. It's a simple dictionary just so that you can get a sense as to what some of these terms that bankers use mean, and just become more familiar with the way that they see an application. Okay. Here's an example of comparing and using simple tools that are available. In this case, an Excel spreadsheet. If you have a computer, a laptop, or a desktop, if you open up Excel, nowadays there's so many tools available. But here, just to get an idea as to the comparison that we should be doing, if we had a loan, if we were considering a loan of $5,775, and we only knew this information, if we only knew the payment amount and the payment frequency, think about it and try to guess which would be a good loan. Okay, A, B, or C. A lot of times when we apply for a loan, we don't look into the details, and we just sort of go by the fact that they're providing capital. But that's a dangerous way to decide to get a loan, because later on, after signing, we realized that it might have been a risky loan. Okay, so if we knew this information here, if we knew that we had this option A, B, or C, and the payment was $363 for option A, and we compare it to maybe option B, which is $127, you might think that, well, B is probably more attractive because we pay less. Or comparing A to C, $233 a month is less than $363 a month. Okay, but in looking at further detail, maybe we realize that the rates are different, and that could definitely change our deciding process. So if we knew the interest rate on option A was 15.9 and option C was 30.74 a year, then we would probably go back to A, just based on that. Okay, as the more information we know, the better decisions we're going to be able to make based on our needs. Okay, if we then know the loan period in years, that would help us determine the total payments. So in this example, we, in looking further into the terms, we're realizing, which one is going to cost more than the other. Okay, and this table is as an accessible tool that we can use with Excel in a computer. Okay, so after doing further investigation of the terms, including the term years, the frequency, the annual interest, the payment, how that's gonna come out, and we realize the cost of the loan, then we can see clearly that option A seems to be the most low cost loan option. Okay, and in this case, what I did was basically compared the information from a title loan, information from a personal loan company, and in our case, opportunity fund. Okay. So step number 5 is calculate and compare a what-if loan scenario. And again, using an Excel spreadsheet, and also with the support of the SBDC, we can do a what-if scenario analysis before applying for a loan. So this will help us tremendously in preparation for packaging a loan, so that we can show the lender that we've done our homework and we know that our business can repay the loan back. Okay, in this case, I'm suggesting that we do a monthly budget cash flow summary to simply identify how much money we generate, how much it costs us to generate that, and what are the costs. So if we do the math, and in this case, we identify that we're generating at least $1,000 to possibly serve another loan, then we can compare for our loan options. Okay, so here we're comparing here a potential loan with Opportunity Fund, and we have here, if you can see the cursor, we have an option of trying to apply for $10,001 for 24 months and 12.9% interest annual with a one-time fee of 5%, no prepayment penalty. The monthly payment basically is going to be $499 a month. Okay, so if after doing the math on how much money we generate, how much we spend in expenses to generate that money, and we have $1,000 left, then we can have a good idea that we will be able to pay the $10,000 over a period of 24 months. Okay, so the goal here is to invest those 10,000 into additional inventory or products to then try to increase our gross sales and as a result also increase our net income to make sure that we're be able to pay that loan back. Okay. Step number 6 is know the alternative lending landscape. So we did a study at Opportunity Fund with our staff, and we studied a group of loans that we actually serviced, and we identified the following: the clients that we served were coming to us with existing loans that averaged 94% APR. Okay, this is with alternative lenders. This is not with traditional banks. So there's many alternative lenders nowadays that are offering very, very attractive options for lenders, where they basically say that they can obtain financing by the click of a button, and the process is so fast that a lot of times folks don't get the opportunity to compare and realize what is it that they're signing. And once they sign, then they realize, they're paying 94% APR a year, and that's gonna start hurting their business growth potential. So, in that same sample study, we also identified that business owners were coming to us with multiple loans, a practice that is referred to as stacking. Okay, trying to get a second loan to pay the first one and a third loan to pay the second one. So this is a very very unique time that we're in terms of alternative lending options, but a very risky one also. Okay, the same study highlighted the fact that folks who obtained those alternative loans were paying 2 times the income, the business income that the business was generating. Okay, that's a formula for slowing down growth and possibly shutting down the business. Okay, and as a result, in the business option that we gave them, we were able to refinance those alternative high cost loans, and we were able to reduce the monthly payments by more than 60%. Okay, and the APR dropped by an average of 85% in many of the cases. Okay, here we have sort of a graph to give us an idea as to what kind of terms alternative lenders are providing to business owners. So if you see on the graph on the left-hand side, from left to right is the term. So you have some loans that are termed out up to 6 months on the left-hand side, and towards the right, you have the terms that are more than 18 months. From bottom to top, we have the rates. On the left-hand side, we have a guide there of loans that have APR from 10%, to greater than 70%. So this gives you an idea as to where those lenders are at. So, for instance, MCAs are merchant cash advances. These are lenders that provide advances to businesses that promise to repay with future sales. Okay, these are technically not considered loans, but that's the danger part of it, that folks don't realize that a loan in this of this type will be a very short loan with a very high interest. Okay, and to the far right and bottom is where we stand as far as Opportunity Fund. Our loans are longer than 12 months, and the rates are much lower. They're under 18%. Okay, just to give you an idea as to where a bank would be lower than 10%, and loan terms would be also greater than 12 months. Okay. In a comparison of that same study, we identify the following characteristics of a alternative loan, and we identify that the average loan amount that they were lending was 32,664. The average repayment amount was 55,735, and the average number of months was 23 months on average. The monthly payment was about 4,200 with an APR again of 93.9%. Okay. In comparison, comparing that with Opportunity Fund's refinancing loan characteristics, we're lending an amount on average of 36,376, repayment of 42,000. Average number of loans is 32. The average number of months is 32, and the payment per month is 1,358 with an average APR of 9.8. So if we compare side by side, we can see that the alternative loans are lending a smaller amount of dollar within a shorter period of time, and the repayment is greater, versus Opportunity Funds lending a little bit more money than they are, and with a longer term, so that we have a smaller payment. And the cost, which is an important key part of comparing an alternative loan with Opportunity Fund, is way lower than the alternative. Okay, at about 9.8%. Okay, our loans are affordable, and there's no hidden fees. Okay, so with that, just to give you a brief overview of who Opportunity Fund is, we are a California nonprofit CDFI organization. We're not a for-profit company. We've been operating in California for over 20 years. We have basically 3 offices, one in San Francisco, San Jose, and in the Los Angeles area, we're in City of Commerce. Okay. Last fiscal year, we made in Southern California alone, we made about 1,265 loans. Okay. We are big advocates of responsible business lending. Okay, we're trying to push this at a national level, this Bill of Rights for business borrowers. Okay, the right for transparent pricing and terms, and many other important rights that will benefit business owners. Okay. Moving on along a little bit quicker, Opportunity Fund sample clients are those who are considered too small for conventional loan or an SBA guarantee. The business owners that have some negative credit history, or some serious credit histories in the past. Some businesses that we finance are home-based and mobile food businesses, and also businesses that don't have a Social Security. Okay. Basically, the loan programs that we offer range from $2,600 up to $250,000, up to 5 years, with fixed interest rates of between 8.5 and 18%. The requirements are pretty simple. At least 1 year in business. Where a bank might require 3 years, we require at least 1 year in business. We have a 2-page application. We would look at the 3 most recent bank statements, and at least 1 year of tax returns if the loan is going to be greater than $10,000, and also the proof of business, a list license, permit, or the corporate documents, if there is available, and the business owner is willing to pledge a personal vehicle or commercial. That will help us to try to maximize the loan amount. Okay. We work well with community partners like the SBDC. If we're a good option, they will let you know after you review with them your loan package, and possibly refer you to us so that we can help you grow your business. Quick example, we had a client in the OC, had a sit-down pizza restaurant, 14 years of business. They were generating $35,000 in monthly gross. They got declined by a bank because they had less than 615 FICO score, and had a merchant account where they were paying $5,000 a month. Okay, We came in, we refinanced that balance, and now they're paying $600 a month for a term of 24 months, 12.9, and a one-time 5% fee. Okay. Another client, LA Pool Service business, 1 year in business with 8 years of experience, was generating 7,500 gross revenues, and they obviously weren't going to qualify for a bank because not a lot of credit history and very little time in business. We were able to finance, in this case, a commercial vehicle with a down payment of 7,500. He's now paying 632 a month for 36 months, 12.5 interest rate, and one-time fee. The requirements for the, again, Opportunity Fund, pretty straightforward, simple access, and the benefits are there's no prepayment penalty. We built a personal credit history, and it's an option to gradually increase the loan size. Okay. And I hope you were able to get a lot of good information today, and I'll just turn it over to David at this point. And if there's any questions, feel free to contact the SBDC to get that process started, and best of luck. David?
Thank you very much, Osvaldo. Really appreciate your time. Osvaldo, we have a couple questions. Let me go ahead and get started. I know we're running out of time here. So the first one is the 10-year figure you gave, the actual threshold we want to reach on our credit cards, or is 10 years just an example?
The 10-year, 10,000.
So you gave an example on length of credit history. Is the 10-year figure you gave actual threshold that they want to achieve, or is it just an example?
That's just an example. Yeah.
Just an example. Okay. Yeah. The next question, if a business owner gets a loan from these alternative lenders with extremely high interest rates and fees, what options does the business owner have at that point?
At that point, I would suggest, sit down with a financial consultant, possibly at the SBDC, and have them review what are the options are out there. Again, the SBDC has has a list of many responsible lenders, so they would be a good option to sort of schedule an appointment and have a review of what interest rate you're paying, get a sense as to your credit and the minimum requirement from these lenders. But you have options, and the options are really to review how much you're paying, how your credit history is, and consider, in this case, possibly Opportunity Fund to refinance and see if there's going to be a benefit. A responsible lender will highlight the benefit to you and the the option that you might have at that point. And they shouldn't lend a loan that is going to only put you in more debt. We at Opportunity Fund won't be able to lend if it's going to endanger or increase your business debt. So, yeah.
Thank you, Osvaldo. Next question is, how are student loans perceived by lenders? Many these days have high student loan debt, but are paying them off under an income-based repayment program. Are all of these people out of luck for getting business loans, or is student debt treated differently?
Student debt is part of the debt. So if the business owner is still paying student debt, it has to be taken into consideration for the repayment capacity for any new loan. There's some lenders that may be a little bit more accessible than others. And I can only speak in this question in Opportunity Fund. If there is some student debt and some past missed payments on student debt at Opportunity Fund, we will be able to work with that. But still, the question will remain for us or for any lender: is the business generating enough sales and income to repay the proposed new loan?
Thank you. Next question is, which alternative lending companies do you recommend looking into for a startup business, 0 years in business that has won a government contract? Say 100K to 200K is needed, not 10K to 20K.
There isn't. Again, I guess that would go back to that first reality is that if the business is not operating and not generating any sales growth, I don't know of any lender, alternative or traditional, that will provide a loan for a startup. That's a reality. But again, you might want to check with the SBDC. They have a big list of potential lenders, Opportunity Fund being one of them. For Opportunity Fund, we need to see at least 1 year in business and some repayment capacity from actual sales. So there are some lenders that would be able to provide some loans based on projections, but I would check with the SBDC to see which lender is in the position to do that or would be willing to do that.
Thank you. Next question is, and we have 2 more left. Why do some banks deny lending to home-based businesses? What is their reasoning?
I think that the reasoning there is the viability of the business, meaning that they're used to something that represents more stability, and a business that is based from home, although it is a way that many small businesses start or nowadays have the option with the use of technology and online presence. It might still represent a new business that it hasn't been established. So that's probably the reasoning going on behind there, that there is no assets. Yes, there might be a home that could be pledged as an asset, but there's no business assets to justify lending a loan to that business. Then again, it depends on the situation. If the home is paid already and there's equity in the home and business is operating out of the home, that might be something that the banks would be interested in working with, because there's a guarantee there. But it really depends on the situation. It depends on how big of the business operations, even if they're being run out of the home, how big the operations are, if they have an online presence, how much money they're generating, and how long they've been doing that. So those are some of the questions that the banker might have.
Thank you, Osvaldo. Last question. Would you consider accounts receivable from projects as payments for the loan?
Some lending companies will, but if the question is, will Opportunity Fund consider accounts receivable? Unfortunately, we wouldn't. Opportunity Fund would have to go by actuals. So the 3 most recent bank statements would be the information that we would look at, and we would hope to be able to provide as much capital as we can to help that business grow. But there are some banks that would be able to provide financing based on projections, of which those accounts receivables would be considered. So for that, I would suggest, again, check with the SBDC and the list of lenders that they might have to be able to help you in preparing for that potential loan request.
Thank you, Osvaldo. We do have one last question, and we'll just sneak it in. I apologize for going over, but thank you everyone for listening. The final question is, which lenders would you recommend for a small business located out of the U.S., but with potential market in the U.S.?
For that, I think some international banks, some big banks here that have a relationship with other banks, that gets a little bit more tricky. There are some banks that offer, I guess, um, commitment letters, but I guess I would bring that the answer to that would be basically that there is very few, and I would suggest, or I guess recommend, that if that company is doing business out of the country, that they look to establish a presence here in the States so that the banks here in the States have something to go by and be able to assess whether or not they can provide a loan for business that has an international presence. Um, but there's very few, and I'm pretty sure that SBDC has part of that list would have some potential uh, lenders. But I highly recommend that that business create a presence here in the States where the bank can have access to information to make an assessment in the lending.
Great. Thank you once again, Osvaldo, for your time and the valuable information that you shared with us today. I want to also thank all of our participants today for joining us. Just one last message. If you are interested in working with the SBDC, please reach out to us. The number is now displayed on the screen. Please give us a call or check out our website and learn about all of our upcoming workshops and webinars. And once again, thank you again for participating today. We all hope that you have a wonderful rest of your day. And we are here to help. So thank you very much for joining us today. And Osvaldo, thank you once again for your time. I appreciate it.
Thank you, David. And yes, I hope I helped a lot of people in their process of preparing for the loan.
Thank you, Osvaldo. Have a good day, everyone. Bye-bye.